You are looking live at the daily chart of the Nasdaq. I'm going to try to keep it shorter today. I know my last few videos have been running long, so there's just been a lot going on, and I kind of want to cover it. So, but today I'm going to keep it a little shorter. We had a distribution day today, not unexpected after this snapback rally here. You could see the big volume on the down day today, which snapped a 9 consecutive day win streak here for the Nasdaq. So that's a nice bounce back or relief rally. But really, I always ask the people at mcstockcharts.com, has it proven itself? Has the stock proven itself? Has the index proven itself? And what has the Nasdaq proven here? And I just want to zoom in a little bit on the index because yes, it had a follow through day on November 1, which is this day here. You can see it's a pretty obvious, stands out, which follow through days should, right? Is up 1.64% on volume, higher than the prior session, and then continued on subsequent, like we had, I think, 3 sessions in a row where we had, essentially follow through days where, the next day it was up 1.78% and then 1.38%, which is all very good. But like I said, has the index proven itself? Well, it can't get above this 13,714 area, which would, mean that it's making, higher highs. It can't make a new high here. I mean, it hasn't. I shouldn't say it can't. It hasn't made a new high. So that's reason for concern. And this candle right here, this looks like a reversal candle to me. So you got to protect yourself on this. And that's why I never went all green here on this little snapback rally. We've been yellow. We've been cautious. We've been increasing exposure, but this is an ominous candle here with the volume. So I would just be careful with that inverted hammer. And it's not abnormal to have a distribution day after 9 days in a row. Of course, there's going to be some pullback. That is a pretty wicked candle, though, and we've seen them before. I pointed them out on the way down. These candles like here and here and here, where they close near the lows of the session. We saw them back, on these 3 legs of the down, the pullback, the correction. You can see them here back in what was this, September or August? Yeah. September, I believe. We had the August, September, and the October, really 3 legs down on the correction. But anyway, just ask yourself, has it proven itself? No, it hasn't. Why not? Well, because it hasn't traded above the 13,714. What it has done, it has proven itself to trade above its moving averages, which is great. Today it closed 0.9% above the 50. That's all good. The shorter term moving averages are starting to trade through the longer term moving averages, which is all good. But like I said, this is an ominous candle here. Just beware. It could certainly trade sideways, or it could even rip higher tomorrow. We don't know. We take it one day at a time. But for right now, it has not proven itself to make a new high. And that's what I need to see. I need to see it make a new high here. And then I'll get a little more aggressive, and a new high here at 14,149. I'll become way more aggressive. By that time, it would be in a power trend, hopefully. So we'll just have to take it one day at a time. Today was not a good day. Big distribution, not unexpected after 9 consecutive days, but that was a heavy volume print, and it closed at the low of the session. So anyway, I'm going to move on. I'm not going to do all the magnificence of them today. I'm going to try to keep it brief. Just the ones that I like. Microsoft, due for a pullback. It was up, what was it, 13 out of 15 sessions, so a pullback today in lighter volume. Not a big deal. It still needs to pull back some more, and let those moving averages catch up. Still 5.1% above the 21. So, this thing's going to pull back either sharply, or it might just do gradually before, I believe Microsoft's going higher, but, and 366 there is a way station, but we'll have to wait and see. And you can see on the weekly, this is a nice looking chart. Okay. Another one that I like of the Mag 7 is Meta, and you can see the consolidation here. And it's trading real tight. It traded below its 50, then rallied right back through it immediately. Now it's trading tight. It was even up today in a week tape. So this is trading tight, real nice. Gosh, I should buy Meta. I don't own it, not yet. I probably should. I did buy Microsoft, but not Meta, and I like that one a lot. And NVIDIA, I like this chart too. I do not like the way, yeah, it was up today on a week session. It was up nearly 1%, but it closed at the low of the session. It was up to 482 and closed at 469. So you can see there 14% of the daily closing range. So not a great, I shouldn't say that. It was a good day for NVIDIA, but it could have been a lot better if the tape cooperated. And the last one of these that I like, but do not own, is Amazon. And I've got to go to the weekly chart. You can see it's pulled back here a couple of sessions, 4.7% above the 21. So still holding nice. And there you can see this, base on base pattern there for Amazon. It traded below it's 50, almost down to the 200, then rallied right back through after earnings. But no, I don't own Amazon. But those are the four that I like in that group. And anyway, I'm going to take you down the negative road today, which is pretty easy to find, and then come back on a positive track. The what I look for in when the market starts selling off and your stocks start selling off and going lower after a nice run, you want to find out where support is. Where are these stocks going to get support? And this is Eli Lilly here. It sold off today. It was downgraded after yesterday. They got their obesity. It's the same drug, but just a different name and a different use. So they're going to use it for obesity. And it ramped yesterday 3.2%, and then fell back today 4.4%. But it just came back to its 21. Not even. It didn't even make it back to its 21. So that wouldn't surprise me to see this thing trade down to the 21 here and find support in the next couple of sessions. I don't expect it to, rally back to new highs, but if it just trades along this 600 area, that's fine. And you got to figure that, the law of, it's just that trading through these psychological numbers of 600, 500, 400, sometimes those provide resistance. So, just be mindful of that. Speaking of which, its competitor, Novo Nordisk, competitor in the weight loss space in diabetes, it's having trouble with 100. Okay, that's not unusual. That's quite normal for stocks to have difficulty at these psychological numbers. So it is having trouble. They've been reporting stellar earnings, and that's all a company can do. We'll see how Wall Street, values Novo Nordisk going forward. It has been a beast for a long time, but all of the drug stocks were down today. Some of them down a lot. This is VERTX, which reported earnings earlier this week, I believe, or maybe last week. But anyway, it just traded down to its 21, but down more than 2%, while the index was down 1%. So AMLX is one that reported earnings. It got just absolutely hammered. I believe it was down like 30%. Yeah, 32%. That hurts a little bit. And AMGN, this is a Dow Jones Industrial Component, sold off 3.37%, sliced its 50. The drug stocks are just been a brutal group. Lilly and Novo Nordisk are the only two that are shining right now. It's been really tough. This is the XBI, the Spider S&P Biotech Index, and you can see it's just been a train wreck essentially after the COVID. The Moderna, BioNTech, and the Pfizer, the Johnson & Johnson, after the COVID vaccine, climax top, this thing has just been steadily downhill, steadily in a downtrend, all moving averages pointing due south. It's just been a train wreck. I'm going to get off my soapbox. Just stay away from drugs. Don't do drugs. Stocks, that is. Okay, I said I was going to come back on the positive track. I like the education stocks. This is LRN. It had this gap higher, and I'm going to talk more about gaps here at the close. But this one gapped up by 18% and closed in the upper half of its daily range and continued higher. And on this session, the volume was nearly 900% above average daily volume. So these do well in certain markets, these gaps higher. They don't do well. Like in 2022, they didn't do well at all. This market's been a little more forgiving of these breakouts and gaps higher. but that one is nice. Another one in this same space, the service, consumer service education, is EDU, and this one's just trending higher, making higher lows. This is classic buy the dip when it pulls back to moving average stock. So EDU looks good, and then ATGE, this one gapped higher as well with LRN. And I don't know if it was quite as dramatic. It was 15% with 166% above average daily volume. I mean, it's continued to climb higher. The low that day was 46. Now it's at 55. So, and the high that day was 50. So that's a nice 10% gain just buying the high of the breakout. So that looks good. Okay, I'm going to get into the. This is a computer software education media. People give me a hard time. What do you mean education? Spotify is not education. It's just music. But Spotify looks good to me. I think we have this on our watch list. Pretty sure. If not, we should. But anyway, I don't have the list right here, but this looks good to me. And its partner had a nice breakout day today. But yeah, it's just consolidating in this base here since July, middle of July. So Spotify looks good. Duolingo. Now this one is education media. Gapped higher today and closed at the high of its daily range. You can see that closing range, 97%. That's what you want to see. Opposite of Roblox, which people are dying to get out. People are dying to get into this one, either short covering or whatever. But a 35% gain with a $35 gain, 21% with nearly 500% above average daily volume. So that's a powerful move for Duolingo. I'm going to talk about that a little later, but yes, this group is showing strength. And COUR, Coursera, is another one in this consumer software education media group that's doing well, finding support at the 50, after this breakout, trading higher. I don't own the stock, but it is showing strength, and I kind of like it. I prefer to own the leaders, which would be Duolingo, but anyway, it's doing well. I'm going to move on to the financial software stuff that I don't talk about ever. But FICO, if I just got to go to the monthly. This one looks like Novo Nordisk and Eli Lilly. On the monthly, it's just been a big time winner for a long time. I mean, from 10 to 962. I mean, you could do the math there. It's been a big time winner, and today kind of broke out of a base here, and it was up 2% with a good volume. So nice move after earnings. Also, this one crossed my list, and it's pretty thinly traded. Had a big move today, up 21%, 500% above average daily volume. So that was not a move to be ignored. 94%. It closed at the daily range of 94%. You got to pay attention to that. We'd like to see, the higher the better. I'll just say that, higher the better. And then Coin is another stock in this group, computer software, financial. Now the Bitcoin, the digital currency had a big rally, and they kind of faded towards the end. MicroStrategy did the same thing, all of the Bitcoin stocks, and this is tied to Bitcoin or digital currency, and it was still up 5% with the 168% above average daily volume, but you could see it closed. The daily range is 18% there, so on the lower side. And if you go to just a 5-minute chart, you could see the big high hopes, big buyers, and then all of a sudden sellers come in, sell, and just I want out of here. Let me take profits. And so it closed near the low of the daily range. All right. And in their defense, I mean, it was a pretty weak tape today. I haven't talked about the heating air conditioning group lately. Their business is hot and cold. Some of their stocks have just fallen out, but some of them are hanging in there, including Linux. It's got this flat base pattern with that 393 buy point there. That pattern rec is picking up. So that one looks pretty good. Fix is another one. This is the one I like out of the group. I don't know why. I like the way it trades. It sold off, sliced its 50, pulled back hard to the 200, then ran right back through it, and now has pulled back. It's pulled back almost to its 10 EMA. It's 2.1% above the 10. So this one's shaping up here. I'm going to keep my eye on Fix, and then LMB. I believe they reported earnings today. A big move, 17% 143% above average daily volume. This is a really thinly traded, small cap, 388 million. This is a flea of a company. But you got to acknowledge the move that it ramped through the 50, and that was a strong move. And anyway, I said I was going to keep it short, and I'm keeping my promise. Going to have to watch the index. It's got to stabilize. I know Powell spoke today, and a lot of the Fed speakers spoke, and it spooked some investors. But you still got to watch the index tomorrow. It's got to stabilize. It can't be selling off like that day after day. Otherwise, it's going to be time to adios, muchachos. In honor of the great Steve Jobs, one last thing. I've got a couple things I want to cover. And I touched on it briefly earlier. In certain markets, these breakouts work. Certain markets, they don't. And this one broke out at the end of October, right when the months were turning and the market was turning. And this is Decker's Outdoors, I should say. This one, I thought it was going to have trouble with the 600 number like Eli Lilly has, but it ran right through it. Right here, the high of this day was 585. So you think, oh, I'm buying at the high, I'm chasing it. Well, no, now it's at nearly 630, $45 higher. Because like I said, the environment is more conducive to these types of breakouts. And also Decker's had stellar earnings. You could see the acceleration in sales and earnings growth here with this company. The Hoka and UGG brands are just really popular right now, and they are killing it. They bought Decker's bought Hoka for $1 million in 2012, I believe, and it did 440 million in last quarter alone. So that's one of the great buys of all time. Congrats to Decker's. They know how to market it too. They've done a good job marketing it. So, okay, I wanted to point out, I showed you DUOL and their breakout today. We're going to keep an eye on this one because of the closing range, 97%. Very nice. But I mentioned this one yesterday, this gap higher in Roblox, and I mentioned that it had, closed at the lows of the session there, 4% closing range. And if you go to the 5-minute chart, you can see how it gapped higher and it just sold off all day. It's like profit taking, like get me out of here. Continued today, open to the downside, and the selling just continued. So that's why you got to watch. Every one of these breakouts are different, and you got to be careful with them. You want to see strength, power. You want to see a lot of volume. You want to see them close near their highs of the session and up at least 10%, which brings me to AFRM. AFRM gapped higher today. I thought it was going to be a big power earnings gap here. It was up, 14%, which is great, 245% above average daily volume, but the closing range 16%. So it's closing near the lows of the session. We'll see how this one plays out the next couple of days. But here you can see on a 5-minute chart the gap higher. And then, investors or traders just going, let me out of here. I'm going to take profits. I've had this thing at 2018 or whatever, 16, 17. It's been a dog. And now it's going to pay off and they're going to get out, right? So they just sold it all day long. Anyway. That's enough on AFRM. Wow, it was $9, $8 not long ago. I've kind of taken my eye off AFRM. So actually, that's a great move. 8 to 24 is a 3-bagger. All right. Enough with the earnings gappers. I want to talk a little bit about a couple of stocks. One is METC, which is an energy coal stock. The energy coal group didn't do a lot today, but this one did because the Wall Street Journal came out with a report that their Wyoming rare earth mine may be worth up to $40 billion. Hello, $40 billion. And so it ramped 36% with more than 1,000% above average daily volume. This is an $840 million market cap. And its mine may be worth 40 billion. So yeah, that's one to keep an eye on, a move like that. Not to be ignored, Dan. And the last one that I want to talk about is Celsius Holdings. The early investor in this company was Carl DeSantis, who passed away back in August. He was the original investor in Celsius back in 2007. And 2007, it was listed. It got delisted. He stayed with it. He invested lots and lots and lots of money into it because he believed in the product. And then when it got listed again, he hired the current CEO, John Fildy. And he was a big player, made a ton of money in Celsius. You can see this stock went from, $3 up to 175, but he passed away recently. And I guess his estate is selling some of his holdings. He was the largest shareholder, I do believe, and his son is on the board of directors at Celsius. So some insiders selling there, and that's to be expected after a big move like that. You got to diversify, you got to put gas in the yacht, but it's putting pressure on this stock. And every time it goes up, it just sells right off. So they're selling this thing into strength. Once again, it's trading real wide and loose. It used to trade, like a $5-6 daily range. You can see that 199 to 204, and then, but now, recently it's trading with the, $21 range. Yesterday it had a $17 range. Today was only 11, but still, it's not trading tight like it did before. It's trading wide and loose. So what I'm trying to say is it needs to calm down. It needs to calm down. It needs these moving averages, these short-term moving averages, to move through the longer-term moving averages. I like the product. I like the stock, but you can't buy it here. I can't recommend. I'm not going to put this on my watch list or ready list until it starts to calm down and start to be more constructive within this base here from 206 to 150. That's quite a wide base. Anyway, that's it for me today. Thank you for watching. Tomorrow's Friday, hopefully we'll have a better session. I just want to say thank you for watching, and at mcstockcharts.com, we never give up.